Good afternoon, everyone. My name is Sandy Kaiser. I am the Employment First Specialist that is with the Division of Developmental Disabilities. So I've brought Jennifer Seidel back again to continue our topic, looking at benefits and how work impacts those benefits. So I'm glad to see all the excitement and wanting to learn more about this. So before we dive in and take a closer look at SSI, we of course want to know who's in our audience. So real quick, we're gonna do this poll just to get a gauge for what the makeup of our audience is. So we'll have about a minute to answer that. So let us know what your role is. Are you a support coordinator? Are you a service provider? Do you work for a regional office? Are you working for another state agency? Maybe you're an individual family member, or maybe you kind of fall in that other category. So let us know what your role is. You've got about 40 seconds left. Right. And so now, just to kind of see what the results were, looks like a good half of our audience are support coordinators. So we've also got a good number of service providers who have joined us today. So welcome. We've got a few regional office employees, and then of course there's a couple of other state employees, as well as individuals and family members. So thank you all for joining us. We hope you get something out of today's conversation. So today's topic, we wanted to take a closer look at how income impacts supplemental supplemental security income, if I could talk. And we also wanted to kind of cover an overview of those work incentives that are available to supplemental security income. Now, one thing I want to warn you guys about is a few of our examples do have SSDI in them. However, again, the focus of today is going to be on supplemental security income, which is different than SSDI. So just wanting to make sure you're aware of that. So talking about some of the basic terms, some of these you probably saw last month. So SSA referring to Social Security Administration, SSI referring to Supplemental Security Income, SGA, Substantial Gainful Activity, and FBR being Federal Benefit Rate. But there's going to be a few more acronyms that we're going to introduce you to today. So impairment-related work expenses, student earned income exclusion, blind work expenses, plan for achieving self-support, and the property essential for self-support. So those bottom five are the work incentives that we are specifically going to talk about today. So again, today is just going to be a high overview. It's just giving you a taste of what these work incentives are and how they can be used. So we're hoping to be able to answer everybody's questions, but if not, just keep them coming in the chat. We will try and get through as many questions as we can today. But ones that we aren't able to get to, we may be reaching out to you individually, or we might be bringing it up in a next webinar. So just keep with us. So Jen, you want to cover a basic review of SSI for our participants again?
Yes, absolutely. So for those of you who tuned in last month, you might recognize the sheet, but we're just focusing on the SSI this time. So first of all, um, remember that SSI, in order to get SSI, you have to have a financial need. So that's like key. And you have to have a disability according to Social Security's definition of disability, or you have to be age 65 or older. You have to have assets below $2,000 and you have to have a low income. In this particular case, initially you have to have an income below $841 per month. And again, keep in mind when we're talking about this cheat sheet for today, we're looking at someone, an individual. So not someone who's married or someone who's blind. These are set up specifically for an individual who is not blind or married. And the maximum amount that someone could receive per month would be $841. That amount is reduced according to someone's income. And if the person is receiving help from someone else for their room, board, food, those types of things, that will also reduce someone's SSI benefit. The benefit is typically paid the first day of the month. Someone who is eligible for SSI will also almost always be eligible for Medicaid. However, in the state of Missouri, keep in mind that is a separate application process, and you do have to respond to requests from them in order to keep Medicaid. So that's an important piece. Also, if the person receiving SSI is married or under the age of 18, their spouse and or parents' income and resources are considered when determining SSI eligibility. As a general rule of thumb, when someone has other forms of income, their SSI benefit amount decreases. And we're going to dive into this a lot more in our examples as we go through the slides. But fact number one is just because you have income, doesn't mean you're not going to be able to get SSI, but your income does affect your SSI check. And we've got some examples here of how that is impacted, but I'm going to dive into that a little bit more in future slides. So I'm not going to go into that too much right now. Fact number two is that if your SSI goes to zero due to work, you can still keep your SSI claim opened and you can still be eligible for Medicaid. So these are important facts to keep in mind. And we're going to talk about this a little bit more, not only today, but in the future. But some keys to being able to keep that Medicaid is the person has to still be considered to have a disability. They still have to have assets below $2,000. They have to have a need for Medicaid. They have to be able to get SSI again if they didn't have any earnings. And their annual income needs to be below the threshold, which in Missouri is $47,000 and $47,836 a year. And so anyway, some myths to watch out for is that your SSI goes down when you work, so you have less money. Well, yes, the SSI does go down, but you don't have less money because you have your income on top of that. So those two things added together mean you have more money. And then finally, you'll lose your SSI and Medicaid if you work. So we just talked about how there's some special things put into place where you can not lose your Medicaid. And if you lose the SSI or it goes to zero, that can happen, but you can get your SSI back again if your income changes. So very important things to know there.
All right, so now we want to give you some foundational work. So one of the things that you'll hear us stress over and over again is that any income is going to affect SSI. However, the type of income makes a big difference. So Social Security treats earned income differently than what's considered unearned income. So laying a little bit of a foundation here, we wanted to kind of talk about what is the difference between earned and unearned income. So Social Security basically states that earned income is income that comes from work, wages, net earnings from self-employment, certain royalties, and even sheltered workshop income. So just because somebody works at a sheltered workshop doesn't mean that that income is not being counted when it comes to Social Security. Unearned income, on the other hand, is income that doesn't come from work. So this may be income that comes from other Social Security benefits, SSDI, parents' benefits. It might be income that comes from a pension, unemployment benefits, interest income, dividends, even cash from friends and relatives can be considered income. So what is not considered income? So things that are not going to affect one's supplemental security income: food stamps, home and energy assistance, food or shelter based on a need provided by nonprofit organizations. So again, this is not food or shelter that a friend or a family member is helping out, but it's actually through a nonprofit organization. Money that someone else spends on expenses that aren't food and shelter. So family and friends can help out with internet, car, entertainment, telephone, as long as it's not tied to that food or shelter that one needs. Income tax refunds do not count. So one of the things that we hear about is individuals that are on SSI or even Social Security benefits and they're getting work income. A lot of them may qualify for what's called the earned income tax credit. This has them getting more money in tax returns. So a lot of times there's that concern that, oh, wait a minute, is this going to count as income? And Social Security basically does not count that as income. So loans that you have to repay, grants and scholarships, fellowships, or gifts that are used for tuition and educational expenses. So that's another one that we hear about, is if somebody's got a Pell Grant or some kind of educational scholarship, if that is going to affect their supplemental security income, because sometimes that's going for room and board costs with staying at school. So, and then the last one here, income that is set aside under a plan to achieve self-support. So that is something that we're going to talk about a little bit more. So Jen, you want to kind of show us what that effect of income is on SSI?
Right. We're going to kind of go through some of the things that Social Security looks at when they're making that final determination of what someone's SSI benefit amount is going to be. So the very first thing that they're going to look at is what they call a general income exclusion. It's $20. Everyone gets to take $20 off of their income. So generally that is subtracted from unearned income first, but if a person doesn't have any unearned income, then it is subtracted off of their earned income. So everyone will get to take advantage of the $20 of the general income exclusion. The next exclusion is what we call the earned income exclusion. So as it says in its name, it's related to earned income. If you don't have earned income, you don't get to subtract the $65. If you have earned income, then you subtract it from your earned income amount. Then the next thing is what we call the earned income disregard, which is really nice. This is where you get to see the benefit from working. And that is where Social Security is going to take the remainder of the amount after you subtracted the $20 and the $65, and they're going to disregard half of the person's earned income. And that's what number is used to determine what the person's final SSI benefit amount is going to be. And we'll see that in some examples. So get ready to do some math pretty soon. So here we go with our first example, and her name is Casey, and she's 25 years old, and she is receiving $841 in SSI. She has a part-time job working 15 hours a week, making a minimum wage of $11.15. So we do the math there. We figure out that her total income from working is $669 a month. And so in her particular case, she doesn't have any unearned income. So we get to take the earned income exclusion and the general income exclusion off. So we subtract the $20, we come up with $649. And then we get to subtract her earned income exclusion of $65. We have a remainder of $584. And then that disregard of 50%. So that's $292. We subtract that and we have a countable earnings, SSI countable earnings of $292 once we get done with the math. So what Social Security does is they take the base amount of $841. That was the amount she was getting before she started working. So that was her full federal benefit rate. We subtract her countable income of $292, and that leaves an adjusted SSI payment of $549. So you'll see by adding the adjusted SSI payment of $549 with the total amount of income she got from working, the very top number of $669, you add those two together, she's a total monthly income of $1,218, which is clearly going to be a benefit to her over just $841 a month. So, all right. So we throw in here an example of unearned income. So in this particular case, we're looking at the same situation with her job, but let's say now she's worked long enough and she's gotten enough work credits that she's actually able to start drawing Social Security disability income. So that means she has some unearned income, because you'll remember Sandy mentioned an example of unearned income is that SSDI payment. So in her case, Social Security is giving her $500 a month in an SSDI benefit amount. So because that's considered unearned income, we're going to subtract the $20 from that, leaving a countable unearned income of $480. Then we still have the same amount of earned income, $669. We subtract 65 from the earned income exclusion. We get $604. And then we divide that by 2 for the disregard, leaving $302. And then what you do is you take your those two numbers together, the countable unearned income and the countable earned income, and you add those together, you come up with $782. Now, that amount is still less than the base rate of $841. It's getting close, but it's still under it. So when you subtract the that amount from $841, you come up with a difference of $59, and that is now Casey's SSI benefit amount adjusted after her her other income. So you think, well, hey, that's not very good. That's not very much. But keep in mind, she's getting that $500 SSDI benefit check as well. So when you add all three things back together, you've got her unearned income of SSDI for $500. You've got her earned income of $669. Plus, you've got her SSI benefit check of $59. You put those three things together and you have $228 that she has to be able to meet her financial needs for the month.
And I think the thing that we wanted to stress here in these two examples is so that you could really see how Social Security treats unearned income differently than earned income. So in the previous example, Cassie got more in SSI because of the way the unearned income was treated. So only about half of the work income was counted when we looked at how does her SSI get adjusted. However, if you look at the top part of this example, only $20 of that SSDI is not getting counted. So her SSI, if that's the only income she had was that SSI and SSDI, her SSI would be reduced by $480 right there. So that's the thing that we really wanted to kind of point out to you guys is that difference there. The other thing that you guys need to be aware of here, so you noticed in both of these examples, the way we calculated that work income is we took the number of hours per week that Cassie's working, we times it by her hourly wage, but then we only times it by 4. And the reason that we only times it by 4 is that with supplemental security income, Social Security counts one's income by when it is received. So most times, I mean, a lot of jobs, they pay every other week. So most people are getting about 2 paychecks a month, which is covering about a 4-week time span. So that's what we went with, is that in general, more often than not, somebody's only going to get about 4 weeks worth of pay in 1 month. And again, this is for supplemental security income. So what we're going to cover today, we're going to cover those specialized work incentives that are available for supplemental security income beneficiaries. These are deductions that may apply to some people, but don't apply to all. There's certain criteria that has to be met for these work incentives to be able to be used. And we're going to go over that in a little bit more detail. So also, just real quickly, addressing a question that came in through the chat, you know, about needing to know the difference between SSI and SSDI. So you're right, there is a very big difference in those benefits. Not everybody understands those differences. So we did kind of do a high overview of the differences between SSI and SSDI benefits last month. So I did put the link to where you can find that archived webinar, should you want to go back and look at that. Also, another resource that does a really good job of kind of talking about the rules and the differences between SSI and SSDI, you'll find on mo.db101.org, and that's mo.db for disability benefits 101.org. There are 6 different videos that really put things in very succinct and easy to follow terms. So they're short in length, about 5 minutes each, and they do a great job of explaining things so that people who don't really have an understanding of Social Security can understand what that benefit is and how income affects it. So, and I'll put that in the chat box. But we will move forward with starting with our first work incentive, impairment related work expenses. Jen?
All right. So IRWEs are out-of-pocket costs for items or services that are needed to work because of one's disability. So the key to this is that it has to be related to the person's disability. Keep that in mind as we're talking about this. So who could potentially be eligible for an IRWE? So basically anyone who's working could potentially have an IRWE. The key is that it's needed for them to work and it has to be due to their disability. So what should you do if you think someone is potentially eligible for an IRWE? First of all, you might want to have them talk with someone from Social Security because each office handles things a little bit different. They may have some different requirements on how they want that information submitted to them. So maybe they want it sent by mail, or maybe they want it dropped off, or there's different ways that they can report that information. So you want to talk to them and find out how they want to have it handled and if they have a specific form they want that information put on. All right, so let's look at an example of what an IRWE is. So Jack has a job. He's working 30 hours a week, earning minimum wage. He has to wear slip-resistant shoes while he's working, and he also has some medications that he needs to take because those medicines help him to concentrate better and help to stabilize his mood. Now, Medicaid does pay for a good chunk of that medicine, but he has about $10 worth of out-of-pocket expenses each month for his prescriptions. So let's look at our little breakdown here of his income. We did the math. We came up with his income being $1,338 a month. And we did our same subtraction here. We got $20 we're subtracting for the general income exclusion. We've got $65 that we're going to subtract for his earned income exclusion, leaving us a balance of $1,253. And then we're going to go ahead and subtract the IRWEs, and that comes before we do the disregard for the rest of the wages, the half of the wages. So now look, at just has the $10 there, didn't take out anything for the shoes, only the medicine. And the reason for that is because the slip-resistant shoes would not be considered an IRWE because everybody who works there is required to wear the slip-resistant shoes. So it's not something specific for Jack's disability. So it doesn't get to be counted in this case. So we subtract the $10 for the IRWE, leaving $1,243. Then we get to divide that in half, and you get your remainder there. And then from the remainder, you have so the SSI countable earned income is $621.50. And that is the amount that's subtracted from the SSI base amount of $841, leaving an adjusted SSI amount of $219.50. And then you add that with his earnings, you get the total monthly amount that Jack has now to work with, which is $1,557 and some change. So the nice part about this is, as you can see, like if he had more in IRWEs, then obviously that's going to have a greater impact on his SSI being a little bit higher. So the more IRWEs he has, then the greater benefit you're going to get to see from this. And so it doesn't have to just be one thing, and this amount can change monthly. So maybe this month he only has $10, but maybe next month there's something else, and it's not an ongoing monthly expense. It might just be a one-time thing that he had to have. you can still submit that to Social Security. And so then when they do their calculations, there will be a benefit for that month. So it's important to report all these things to Social Security.
And we did have a comment in the chat box. Somebody had mentioned transportation expenses. So yes, transportation can also be an impairment related work expense, but keep in mind that it also has to be tied to their disability. So we all have transportation costs. So just because, you know, we're taking the bus or we're paying for our transportation in some way, which again, I mean, all of us pay for our transportation, but that in and of itself doesn't make an impairment related work expense. You have to go back to, you know, how is what this person is having to pay for due to their disability.
Right, exactly. So is it because the person isn't able to drive because of their disability? Is it because they have to have a specialized vehicle? You know, there's a lot of things that are looked at there, and that's why it's important that you provide that information to Social Security, because they are the ones who ultimately make that decision as to whether or not it's approved or not.
So now we're going to talk about a different specialized work incentive. This one is the student earned income exclusion. It's a provision that allows a person under the age of 22 who's still regularly attending school. And that school can be, you know, high school. It can be post-secondary training program. So college, some kind of trade school. It allows that individual under the age of 22 to exclude earnings from work. So their work earnings from their countable income. So who could potentially be eligible for this? Anyone who's receiving SSI under the age of 22, still in school, so high school or post-secondary education, including a trade school or other vocational training program, and is working. So, and if you think you have someone who is potentially eligible for that student earned income exclusion, we encourage them to talk with somebody at Social Security to make sure that Social Security knows about their student status so that their income, some of their income can be excluded. And you'll get to see how much this can benefit somebody in this example. So in our example, we have Ryak, who is 18 years old and will be returning to school in the fall. So during the summer, he's off for the summer. He's planning on coming back to school in the fall. However, he has an opportunity to work with his uncle this summer. And he's going to be working full-time, making $16 an hour. So he's going to be making a lot of good money, as you could see. So what we expect, 4 weeks worth of pay, Ryak is going to be making about $2,560 for that month. Now, because he's under the age of 22, he's still planning on going back to school, he is able to exclude up to $2,040 per month for a yearly maximum amount of $8,230. So once he reaches that 8,230, then he's not able to exclude any more money. But monthly maximum of $2,040 subtracted from his work income, now we're only looking at $520. So then we subtract the general income exclusion, then we subtract the earned income exclusion, then we're able to do the earned income disregard. And out of that $2,560 that he made for a month, we're only counting $217.50. So then we subtract that $217.50 from that base SSI amount of $841, and he's getting $623.50 in SSI for that month. So add that $623.50 of SSI that he's getting to that $2,560 in work income, and he's got a monthly earnings of about $3,183.50. So a lot of money. So Jen, you want to talk about blind work expenses now?
Yes, the blind work expenses, also known as BWEs. This is a special SSI rule that allows individuals who are blind to exclude from their earnings all expenses that enable them to work. The expense does not have to be related to the person's blindness. So this is the big difference between an IRWE and a BWE. So someone who is blind would not want to use an IRWE. They would want to use a BWE because the BWE is it's even more powerful than the IRWE, and it's going to have an even greater benefit for the individual. And so if something could be considered an IRWE, it would be a BWE as well. So there wouldn't be any reason for them to utilize that work incentive. They would just stick with the BWE. So who's potentially eligible for this? Obviously, you have to be receiving SSI, and you have to be considered blind by SSA's standards. So just because someone may say they're blind, it doesn't necessarily mean they can have a blind work expense. They have to have that designation by Social Security. And they also have to obviously be working and have expenses related to their activities. Again, it's really important to communicate with Social Security and the person's representative if you think someone has blind work expenses, because you know what, if you don't tell them about it, they're obviously not going to consider it. And everybody who works who is blind has something they could subtract. So this is a no-brainer on this one. Definitely would use this. All right, let's look at an example. All right, so we've got a young man who is considered blind by Social Security, and he recently obtained a job working the 30 hours a week, making $13 an hour. He's gotten some help from rehab services to get this job, and they also helped him to acquire some assistive technology for his job, but he didn't have to pay anything for that. He does have transportation expenses, and he also has uniforms he needs to buy, and he's got to eat while he's at work. So you'll notice here a lot of different things than the IRWE. And again, it's because the blind work expense can count lots of things, a lot more than the IRWE. So, so we look at his total income from work, $1,560. We subtract the $20 general income exclusion, leaving $1,540. We have a $65 earned income exclusion, leaving a balance of $1,475. We have a disregard. Now notice the IRWE didn't come, the IRWE came off right at this point in our other example, and we haven't subtracted the BWE yet. And that's the difference. Another difference between the two is where it's calculated for Social Security's purpose. So in this case, we do the earned income exclusion where we divide by 2 and we come up with the remainder. And now we get to subtract, at this point, the blind work expense. And you're like, $930, that's crazy. So like that's more than already more than his income. So we're already looking at no countable income for him. So you're probably thinking to yourself, well, where did we come up with $930? So let's talk about that a little bit, because we didn't really tell you how much all these things cost. In this particular example, what we used to come up with that was His transportation expenses were $420 for a month because, you know, he did have to pay for transportation for both routes, ways to get there. He also had his lunch expenses, which we calculated to be $210. And then he has taxes that he's able to, that is also considered a blind work expense. And those taxes were $300. So all that together means when you look at all that, that he does not have to have any countable earned income subtracted from his SSI benefit. So he's going to get the entire amount, $841 for SSI, plus he's going to have his wages of $1,560. We add those together, he has a grand total of $2,401 for the month.
All right, so now we're going to talk about a plan for achieving self-support. So this is an agreement with Social Security that allows one to set aside that income and or resources that are going to be used to reduce one's Social Security benefit. So when we're thinking about that countable income that reduces one's SSI, that's what we're saying is under a PESS, that person is going into an agreement with Social Security that they're going to take that money, that countable income, they're going to use it for a very specific purpose. And in return, Social Security is not going to use that income or count that income when determining one's adjusted income or their adjusted SSI. So, who could benefit from a PASS plan? Somebody who's receiving SSI, but it can also be someone who receives SSDI as well. So, the one thing that's very key here is that the person has to have a goal for achieving more financially self-sufficiency through employment. So it has to be an employment related goal, and it has to mean that this person is going to be more financially self-sufficient at the end of that PASS plan. So that could be, that means the person is going to be able to substantially reduce their supplemental security income. It could mean that they are able to engage in substantial gainful activity, which then, if they are getting a Social Security disability benefit, allows them to not have to rely on that Social Security benefit anymore for that income. So if you have someone that you think could benefit from a PASS, this is somebody who's could have a goal for how they could achieve more financial self-sufficiency through employment. You might want to connect that person to a benefits specialist, either through one of our work incentive planning assistance programs or through one of our service providers using the benefits planning service. So this is where we feel that probably a little bit more guidance is needed in helping someone determine whether they really are a good candidate for PASS and flushing out those ideas. So we want to give you an example here so you can see how a PASS plan helps somebody. So in our example, Samantha, Sam, as she likes to be called, wants to be a photographer. And she's currently receiving both SSD and SSI. So she gets about $425 in SSDI and then $436 in SSI. So now she's figured out that to be really successful as a photographer, she is going to have some professional grade equipment. And she may also need to take some classes so that she understands a little bit more tricks of the trade, so to speak. But she believes that once she's a photographer, she's going to be able to reduce how much she is getting an SSI, possibly not even have to get that SSDI anymore. So she's thinking that she's going to be financially better off once she achieves that goal. So because right now she's not working, but because she has that SSDI, what she could do is she could take what Social Security would count from her SSDI. So if you think about it, again, with unearned income, really only $20 of it is not counted. So we took $20 off that 425. So that means 405 is what would reduce her SSI by. So now what she's going to do is she's going to take that 405 and she's going to set it aside for her photography, to purchase that equipment, to take that coursework so that she can become a photographer. In return, what Social Security is saying is, all right, we're not seeing that 405, so we're going to give you the full 841 in SSI. So now she still has 841 plus the $20. So she's got $861 in which to continue meeting her living expenses, which is what she had before the PESS plan. So she still got that 861 to live off of, but now she's got 405 that is going specifically towards the cost of getting that professional grade photography equipment and taking that coursework that she needs to become a more successful photographer. All right, Jen, you want to talk about our last specialized work? Or wait, it's not our last. Sorry about that. The PESS.
All right, so property essential for self-support. I'll be the first to admit this is probably the work incentive that I know the least about and have used the least often. And that's probably because it's not, most people aren't self-employed or may not be able to take advantage of this, but it is still a really nice opportunity for someone, especially someone who's self-employed. But basically what the PESS does, it allows for the exclusion of resources used in operating a business. So this is important when you think about the resource limit of $2,000. If Social Security was going to count someone's resources, like equipment that they had for their business. So take this photography equipment that Sam was purchasing in the previous example. Once she purchased that equipment, it's hers. Social Security is not then going to count that as a resource. So a lot of businesses have equipment that's used every month. You know, it's a mowing company, it's mowers, it's trailers, it's all those kinds of things. So, Social Security is saying we're not going to count that as part of your resources, which means you can continue to hopefully draw SSI benefits in that case. So again, if you think this is something that someone you're working with would benefit from, you would want to connect that person to a benefits specialist, either through WIPA or through the DMH funded services. And let's kind of look at an example, because I think the example is what really makes it clear. So Jake has a lawn care business. He acquired his equipment to operate his own business, and the equipment's valued at $6,000. If Social Security was going to count that, he's not going to be able to keep getting SSI, but they're going to say, no, we want you to be successful. We want you to keep working. So we're going to disregard that resource for you. So because he's able to make about $2,000 from months April to October, he then sets aside about $300 each month into his business account, because he knows he's going to need that money to be able to pay for the storage of his equipment and the upkeep and the maintenance that he's going to need in order to keep his business up and running. Under the PESS plan, Jake's lawn care equipment is not used to calculate his assets, nor is any of the funds that he puts into that business account counted as his resources either. So basically, this is going to allow him to be able to maintain his SSI eligibility and still operate his business. So hopefully that clarifies what a PESS is, how that's different from a PASS plan, and how the two of them can work together sometimes. All right, so this last thing we're going to be talking about is considered a work incentive or something special for SSI recipients, known as 1619B. We're just going to give you a little bit of a teaser here because it is a little complicated, and we want to dive into it a little bit more in future sessions. But the key here is that Social Security and the state of Missouri, in our case, has got some nice things put in place to allow people to be able to continue their Medicaid even when their earnings go above the Medicaid income limit. So Social Security has set up something called 1619B. It allows for someone to keep their Medicaid at no cost once someone's SSI benefit amount zeroes out. So when you are earning enough to not receive SSI anymore, then that's when you can qualify for Medicaid through the 1619B plan. And then also the state of Missouri has a really good program called Ticket to Work Health Assurance, the powerful option for keeping Medicaid for people who are working. We are going to look at some examples of how that works and learn more about how to recognize when someone is eligible for either one of these programs and can keep their Medicaid even while working and earning over the Medicaid income limit. So tune in future session in July.
Yes, that's in July. So basically, I did want to provide you guys with links to the topics that we covered today. So if you want to learn more about what Social Security views as income, the unearned versus the earned income, if you want to learn more about impairment-related work expenses or student earned income exclusion, the blind work expense, the plan for achieving self-support, or even the property essential for self-support, here are the links that kind of you can go and learn a little bit more about those specific topics that we covered today. Also, if you're wanting to learn more, the division hosted a 5-part benefits planning series back in the summer of 2018. So from July 10th to August 6th is when we hosted those 1-hour webinars, and you can access those webinars on our website just by going to previous webinars and looking at 2018. Of course, Virginia Commonwealth does a very fabulous job of introducing people to the differences between Social Security benefits and the work incentives that are available to each of those Social Security benefits in their introductory web course. So you can access that on VCU's website, which is vcu-nt dc.org. And then, of course, we also mentioned those 6 little videos that are available on DB 101. Also available on MoDB 101, besides the videos, there are articles if you want to learn more. So if you were interested about that student earned income exclusion, for example, you could go to mo.db101.org and click on one of the articles on student earned income exclusion to learn a little bit more about that. There is also an estimator or a calculator that one can use to figure out how a particular work situation is going to affect one specific benefits that they get. So that's another benefit of using that DB 101 is you can go in there and take a look at that estimator to kind of figure out, okay, if I go to work and I'm working 30 hours a week and I'm making $14 an hour, what is that going to do to my supplemental security income or to my SSDI for that matter? So we also have some tip sheets available on our website. So we have kind of an easy guide to managing employment and benefits tip sheet, which allows you to kind of know about some different resources and when you might need to tap into those different resources. We, of course, also have that Social Security benefits employment tip, which kind of does a side-by-side comparison of the different work incentives that are available under each Social Security benefit and how income impacts the different Social Security benefits. And of course, also there was a webinar done, I believe in 2021, about changing the culture and message about benefits. So again, the thing that we want to stress here is people don't have to choose between working and maintaining benefits. They can have both. They can be more financially self-sufficient through work. There's a way to do it. It's just empowering them with the knowledge so that they know the rules and what they can do. So, of course, we meet the second Wednesday of every month from 1:30 to 2:30. And for the next couple months, we're going to be continuing our conversation about benefits planning. So June 8th, we're going to be taking a look at those work incentives that are available to SSDI beneficiaries. And that would also include beneficiaries that are getting a parent's benefit or disabled widowers benefit. So we're going to talk about those work incentives. And then of course, July 13th, we're going to talk about those Medicaid work incentives. So we're going to talk about ticket to work health insurance as well as 1619B. So, and then of course, August 10th, we'll be meeting again, but we'll probably be moving on to a different topic. So stay tuned and come back and join us, and we hope you got something out of it. So I don't see any questions in the chat box, but if you've got them, go ahead and send them our way and we'll try and answer them. Otherwise, we'll see you next month. Have a good one, everyone.